the return to be filed for ISD, and all provisions related to ISD in a detailed manner. First, we will see the definition of ISD. This definition is recently amended in the Finance Act. As per Section 2, subsection 61 of the CGST Act 2017, input service distributor means an office of the supplier of goods or services or both, which receives tax invoice towards the receipt of input services. So in the definition, it is clearly provided that the tax invoices should be received with respect to input services. And the major amendment in this section is that these invoices should include the services liable to tax under RCM, that is Section 9, subsection 3 and subsection 4 of the Act. Then for or on behalf of the distinct persons referred in Section 25 and liable to distribute the ITC in respect of such invoices in the manner provided in Section 20. So the main point we need to note here is that the ISD means it is nothing but an office of the supplier of goods or services for which they receive tax invoices for input services as well as RCM invoices, and they need to distribute these ITCs as per Section 20. Moving on further, we will see clearly what are all the provisions of Section 20 and how these input tax credit will be distributed. To understand ISD in a simplified manner, we will take an example. ABC Limited. This company is having a head office in Chennai, and this company has two factories, one at Mumbai and another factory at Hyderabad. Both these factories are registered under GST. So all these registration comes under the same PAN of ABC Limited. And in this case, the ABC Limited has taken ISD registration. So PQR Associates, that is, it is an audit firm and it is supplying audit services to this ABC Limited. So this audit services is covered for the whole organization. So in this case, the audit firm is charging GST at 18,000. So the ABC Limited will distribute the credit among Mumbai factory as well as the Hyderabad factory. So the ratio for dividing these services will be based on the turnover of each factories. In future slides, we will see how these turnover are calculated and how these proportions should be made. To get a basic understanding, we have provided this. Why this ISD mechanism is important? Firstly, a business entity might hold multiple GST registration. To ensure effective credit utilization, there should be a centralized system to distribute these ITC among those registration. So for this purpose, the ISD mechanism helps to equally to determine and properly distribute these credits. And through this mechanism, we can ensure it ensures transparency, and the ITC is also transferred efficiently. As we know, GST is a destination-based tax. The consumption state, which benefits from GST revenue, should only bear the ITC burden also. So through this centralized office, the ITC will be transferred to the consumption state. Now we will see what are the classifications in ISD. So ISD is relevant for multi-locational entities having separate registration. These separate registrations can be in different states or union territories, or these registration can also be in same state or union territory also. So this multi-locational entities can be in the form of factories, retail outlets, branch, divisions, or service outlets. So the only condition is that these multiple GST registration should be registered under same PAN. The ISD mechanism cannot be used for transfer of credit to holding company or a subsidiary company or a group entities, or transfer of credit between any related parties, because all these organizations have different PAN. The the ISD provisions does not apply to these companies. The CBIC, by way of notification, that is notification number 16/2024, has provided that ISD provisions should be mandatorily applicable from 1st of April 2025. So the main motive of this webinar is to provide clarity on the ISD provisions, and also the ISD provisions are applicable from 1st of April 2025. Registration under ISD. As we know, Section 24 of the CGST Act 2017 provides the list of entities for which registration is compulsorily required under GST. So one of such thing is the input service distributor. If a person is liable for ISD, then they should get compulsorily registered in GST. To get registered, they need to file the form REG01. They have to specify under serial number 14 that they are ISD, and only after such declaration they will be assigned a GST number, and they will be able to transfer the credits available to their other organizations. As we saw from the GST definition itself, ISD registration can be availed and distributed only for input services. The ISD registration cannot be availed or distributed for ITC pertaining to input goods or capital goods. The ISD is neither a supplier nor a recipient of goods or services. The ISD is solely used for availing and distributing the common ITC between those distinct persons, and by this transfer, the distinct person will be able to utilize such ITC by discharging their output. They can use these ITC to discharge their output tax liabilities. The ISD will be able to avail ITC only if it is appearing in their GSTR 2A or 2B. They cannot avail ITC based on any physical invoices or something. The condition here is that these invoices should be reflected in the ISDs 2A or 2B. Moving on, this is a very important rule in ISD provision. This Rule 39 provides for the procedure for distribution of ITC by the input service distributor. The ISD should follow these procedures only for transferring the credits. First, we will see the ISD to distribute the available ITC of the month within the same month by submitting details in Form GSTR 6 by 13th of the month following every month. That is, the ISD should distribute the ITC within the same month itself. For example, let us say if they receive any service invoices in the month of May, then they should have transferred that ITC in the May month itself to their branch entities. So by way of transferring, they need to file return in Form GSTR 6. This Form GSTR 6 is a monthly return, and they need to file this return by 13th of the subsequent month. So within 13th, they need to file this return. The next rule is that the Rule 39 provides the distributed credit must not exceed the available credit. For this, we can take an example. If an head office has received any consultancy services for which the GST charged is rupees for 50,000, then they are eligible to transfer only to the extent of 15,000. They cannot transfer more than the credit which is available to them. Credit on input services must be distributed only to the recipient to whom it is attributable. That is, to understand this, we can take an example. From our earlier example, ABC and Company, they have a factory, one at Hyderabad and one at Mumbai. So with respect to their registration at Hyderabad, they have taken a software services, and that services is exclusively for that factory. So in that cases, in that cases, if the HO receives bill for that software services, then they should transfer 100% of that credit to that Hyderabad branch only. They cannot segregate the ITC for those credits because it is specifically attributable to that specific branch. So in those cases, 100% of the credit will be transferred to that entity. If input services are shared among multiple recipients, the credit must be distributed pro rata based on turnover in the state in the relevant period. So the credit should be transferred between the branch entities. We will see more how this turnover will be calculated and in the future slides. As we saw, the credit for all the recipients must be distributed on pro rata basis based on their turnover. The credit distribution formula for the recipient is based on their turnover relative to total recipient turnover. That is the total turnover of the organization, and the recipient's relevant turnover will be determined for determining the ratio for allocation. So we now will have this doubt that does this turnover include only taxable turnover, or does it also include exempted turnover? The answer is that the turnover shall include both taxable as well as exempted turnover. However, while computing this turnover, we shall exclude if any supplies liable to tax under RCM and any tax amount involved, that is any CGST, SGST or IGST shall be excluded. Now, as we know, we need to consider the turnover for calculating the ratio. For the turnover, what is the relevant period that is to which year's turnover we should consider? We have this doubt as to which year's turnover should be considered for determining the ITC. So it is also provided in the rule. They have provided the relevant period should be considered. We will see what is the relevant period in two different scenarios. Firstly, the recipient is having turnover in their states or union territories in the preceding financial year. Then the relevant period shall be the preceding financial year. We can take an example. If the recipient is having if the recipient has to calculate the ISD has to calculate the credits with respect to a entity, then they need to for the month of March, then March 2025, then they can take the preceding financial year, that is 2024-25 financial years return can be turnover can be considered for calculating this relevant period. In case some or all of the recipient does not have any turnover in their states or union territory in a preceding financial year, that is they don't have any previous year turnover, then in that scenario, the last quarter for which the details of such turnover of all the recipients are available previous to the month during which the credit is to be distributed will be considered. That is, if the previous year is not available, then the last quarter for which the details of turnover are available will be considered for the purpose of identifying the turnover. Now we will see the manner of distribution of credit. This is a very important area where we need to be very careful in transferring the credit. Firstly, we will take a scenario where the ISD and the recipient are located in the same state or union territory. Let us say, for example, the ISD, the ABC company, the ISD is located at Chennai, and the recipient, that is their factory, is at Coimbatore. In that case, they are located in the same state. If the ISD receives any invoice, IGST from any invoice which has tax as IGST, then they need to transfer the ITC as such. That is, if they received any IGST credit, they should transfer the credit as IGST credit. Let us say if they have received any invoices for which tax is levied at tax levied are CGST and SGST. Then if they are in the same states, then they can transfer to the ISD units. Now let us take another scenario where the ISD and the recipient are located in different states. That is, to say for an example, ISD is located in Chennai and the recipient is located at Mumbai. Yeah, and in such cases, if the ISD has received any invoice with IGST, then they need to transfer the tax as IGST. In another scenario, in case the ISD have received any invoice as CGST or SGST, then they need to transfer the credit as IGST only. So this is the area where we need to be very careful. If at all they are transferring, if the ISD and the recipient are located in different states and they are transferring credits, then the CGST, even though they receive the CGST, SGST invoice, they need to transfer the credit as IGST. Now we will see the basic rules with how the ISD invoices should be issued. So to transfer the credit, the ISD should issue an invoice, that is the ISD invoice, and this invoice should be issued based on the Rule 54(1) of the CGST rules. In Rule 54 subsection 1, they have clearly provided and as per those rules only we need to issue an ISD invoice. So even though the transfer is happening between the distinct parties, we should raise an invoice, and the ISD invoice should contain these following particulars. We will see what are all the particulars in which this invoice should be issued. The first is the name, address, GSTIN of the ISD. Then consecutive serial number not exceeding 16 characters. Date of issue. Name, address, and GSTIN of the recipient to whom the credit is distributed. Amount of credit distributed. Signature or digital signature of the ISD or his authorized representative. We should make sure when we are issuing an ISD invoice, these are all the particulars which should be clearly mentioned in the invoices, and then only the transfer should happen. Now we will see the general points which should be carefully considered for transferring credits to the ISDs. So the main challenge for the ISD will be that they need to, once they receive an invoice, they need to separately distribute the eligible and the ineligible ITC. That is, they need to bifurcate the eligible ITC and the ineligible ITC. Then the input tax credit for central tax, state tax, and IGST must be distributed separately. They need to, in the return itself, they will separately provide the manner for distribution, and in those, the ITC should be separately distributed. Integrated tax credit should be distributed as integrated tax to all recipients. The credit for central tax and the state or union territory tax must be allocated based on the recipient's location. As we saw before, the ISD should clearly state an invoice, should clearly issue an invoice stating that it is for the distribution of input tax credit. In case if the previously distributed credit is required to be reduced, then the ISD can issue a credit note. If at all any additional credits from debit notes can be distributed subject to certain conditions. The reduction in distributed credit due to credit notes must be apportioned and adjusted according to the original distribution. In case the ISD have wrongly distributed the credit to a particular recipient, or they have distributed ITC in wrong proportion, or they have computed incorrectly and distributed the credit, in such cases, the ISD has an option to issue ISD credit notes to the recipient. So if at all any taxes issued in excess, then the ISD can issue a credit note to reduce such tax liabilities, to reduce such ITC. So the ISD will issue an ISD credit note to whom it was wrongly distributed as excess credit, and in case if it has transferred any less credit to a recipient, then in such cases the ISD can issue another invoice to whom it pertains and also to whom they have earlier shortly distributed the credit. Another important query arises where the credit, if at all, the credit should be distributed only if a unit is exclusively having taxable supplies, or if they are an export-oriented unit, should I transfer the credit, or if they are an SEZ unit, should I transfer the credit? We should transfer the credit irrespective of what the entity is. The credit need to be distributed among all the units, even if it is a taxable unit, non-taxable unit, fully taxable unit, export-oriented unit, or a SEZ unit. Let us say, for an example, if we are having two branches, and through one branch we are only selling fully exempted goods and no ITC is required for that entity. So in that cases, should we transfer the ITC credit to those branch also? The answer is yes. We need to transfer the credit even though if it is fully exempted units. Next, the export-oriented units or the SEZ unit can also use the ISD credit to pay IGST on export with payment of tax. They can discharge their liability on any domestic transactions. They can also claim refund of ISD credit as part of any unutilized ITC. Section 21. Manner of recovery of credit distributed in excess. If any input service distributor has distributed the credit in excess, that is in any contravention of the provisions contained in Section 20, which results in excess distribution of credit to its recipient, then such excess distributed credit can be recovered from such recipients along with interest, and the provisions of Section 73, 74 or 74A, as the case may be, will be applicable for such recovery. So we need to ensure proper care while transferring the credits, because in case if at all we have transferred excess credit, then the department may initiate recovery proceedings for such credit by issuing a notice under Section 73 or 74 or 74A, and they can recover such tax amount along with interest and penalty also. Now we will see what is the penalty applicable if any improper availment or distribution of ITC is made by the ISD. The penalty under this will be higher of 10,000 rupees or the amount of ITC availed or ITC distributed irregularly. So the penalty here will be the 100% of such ITC amount transferred or 10,000, whichever is higher. From this we can see the penalty amount is actually huge. So we need to properly consider such ITC. If at all, then we will be liable to pay tax amount, interest, as well as 100% of the taxes penalty. So we need to apply proper calculation and determine the ISD credits to be transferred. Now we will see other important points which should be taken into consideration while transferring the ISD credits. As we saw earlier, ITC should be transferred on a monthly basis. The ITC cannot be accumulated and transferred. It should be transferred in the respective month itself. Then as we saw, we need to file file a return, that is a monthly return in form GSTR 6, and that return need to be filed within 13th of the subsequent month. In case if we have no ITC to be transferred in a respective month, then we should file a nil return even though no such transaction for transfer took place in such month. A nil return must be filed even if no ITC are available for distribution in the month. The recipient of the tax credit can view the tax credit so distributed by the ISD in their GSTR 6A, that is auto-populated from the supplier's return. So the credit transferred through GSTR 6 will be reflected in the recipient's GSTR 6A. So they can refer the GSTR 6A and they can claim the ITC in their 3B returns. The main challenge for the ISD is to identify the blocked credit and the ineligible credit, and they should determine those blocked credits and ineligible credits, and while transferring they should separately distribute the eligible credit and the ineligible credit. In case of late filing of GSTR 6, then the late fees shall be rupees 50 per day will be levied. Is the ISD required to file annual return? No, the ISD is not required to file annual return. They are only required to file a monthly return, GSTR 6. Now we will see the GSTR 6 form, that is the return for input service distributor. I have taken this form for your reference. From this form, we can identify that the basic details of the ISD will be reflected. Then the table 3 contains the input tax credit received for distribution. That is, this table contains the total. This is an auto-populated table, and this table will contain the total ITC which is available for us in that particular month for such distribution. In table 4, the total ITC, eligible ITC, ineligible ITC to be distributed for the tax period should be mentioned. That is, the total available ITC for distribution will be taken from table 3, and we need to segregate the amount of eligible ITC and the amount of ineligible ITC. In table 5, the distribution of input tax credit is reported in table 4. That is, as we have segregated the amount of eligible ITC and the amount of ineligible ITC, we need to specify the GSTIN of the recipient to whom we are transferring the credit, and the ISD invoice details, and the distribution of ITC. So this is also should be the eligible ITC and ineligible ITC should be separately distributed among the recipients. Table 6 provides for any amendments in information furnished in earlier returns in table 3. That is, if we have filed any return and if there is in the previous months and we need to make any amendments, then we can do the amendments in table 6. In the table 6, we need to specify the original details, that is the previously filed return details, and the revised details. Table 6B and 6C, if any amendments related to credit notes or debit notes should be mentioned here. And the original credit note, debit note should also be mentioned in table 6. Table 7 provides for input tax credit mismatches and reclaims to be distributed in the tax period. That is, if at all any input tax credit mismatch or any reclaimed on rectification of mismatch happened, then we need to report in the table 7. Table 8, that is the amended invoice and mismatched invoice, if any rectified in table 6 and 7, then we need to distribute such input tax credit in table 8. In table 8, we will specify the GSTIN of the recipient and the ISD number and invoices and the proportion of ISD distribution. ITC distribution. Here also we need to distribute the eligible ITC separately and the ineligible ITC separately. Table 9 provides for redistribution of ITC distributed to a wrong recipient. That is, in case we have distributed any ITC to a recipient incorrectly, then we can rectify such error in Table 9. Here we need to specify the original ITC distribution and the redistribution of ITC to the correct recipient details. So this is the return, and finally the late fees will be calculated from the portal, and table 11 will be the refund claimed, if any, from electronic credit ledger will be reported here. So this is the format of the return which is required to be filed with respect to ISD form GSTR 6. Before the implementation of mandatory implementation of ISD, there were a lot of ambiguity between cross-charge and ISD. So now it is clearly clarified that ISD provisions will be applicable with respect to input services. So we will have a understanding of what is a cross charge. So cross charge is a charge on tax or on deemed supply made by HO or centralized office to its distinct entities. In case of any deemed supply, cross charge provisions will be applicable. The ISD is meant for the distribution of common ITC of invoices received by the HO among its distinct entities. We will see the differences between the ISD and cross charge. The first one is that as we saw, the ISD should get mandatorily registered under GST, and they are given a separate GST number. In case of cross charge, no such registration is required. Through ISD, we can distribute input services. Cross charge is actually not defined in GST law. It is a general term used for transfer between distinct entities. So cross charge can be for goods also or for capital goods also. The distribution of ITC for ISD is prescribed in section 20, read with rule 39. However, for cross charge, the valuation mechanism will be as per section 15, read with rules 28, 30 and 31. For ISD, we need to file a separate return in GSTR 6 and GSTR 6A. However, for cross charge, no such return is required. From the implementation, that is from the implementation of compulsory implementation of ISD, it is clarified there will be no ambiguity between ISD and cross charge. If at all the organization is distributing any input services between its distinct entities, then they need to compulsorily get registered under ISD, and they need to file the return form GSTR 6 for transfer of such credits. Case if we are an entity, for us, if at all the ISD provisions are applicable, then we need to take these precautions, that is before April 1, 2025. So we will see that firstly we should obtain ISD registration at the earliest. That is, ISD provisions will be applicable from 1st of April. So it is advisable to take ISD registration at the earliest. Then secondly, we need to inform our suppliers or vendors who provide us any common services, and for such services we need to transfer ITC. Then we need to inform those vendors, and we need to specify them the ISD registration number. So when the vendor issues invoice to our ISD registration number, then only we can transfer the credit. Even though if we have separate GST registration, and in case they have if they have invoiced us to our regular GSTN, we cannot transfer the credit. We need to specifically mention them the ISD registration number, and we need to make sure those invoices are reflected in our GSTR 2A or 2B. And we need to, as we saw, we need to issue an ISD invoices, and we need proper ERP systems and documentation so that we can seamlessly transfer those credits to our entities. So these are all the precautions which is to be taken before the implementation of ISD, before the compulsory implementation of ISD. I hope we all got a good understanding of the input service distributor provisions. Now, if you have any queries, you can please put in the chat box. We will clarify the doubts. In the meantime, our team member Neeraja will explain our future programs and our Zentax portal to give you a basic idea how it works. So please put your queries in the chat box, and we will wait for another 5 minutes.
Zentax talks. We have now reached the 58th session. So thank you for your continued support. So basically, we have two updates. One is regarding our Zencash portal and one is regarding the budget section, which is going to be held on 1st of February. So we are planning to have our session online on the day of the budget itself. So we'll be having our session at 4 p.m. So we'll be sharing the details of the same shortly. And now, firstly, coming back to the Zencash portal. So first, basically the objective of creating this Zencash portal is, so it is basically user-friendly. So user-friendly in the sense, the portal has been designed in such a way that we'll be able to check all the notices in a single dashboard and checking all the GST notices using one platform. So this, the main objective of Zencash Clinic is basically to check the notices in a single dashboard. So basically, we'll be having the if you are a company, we tend to use so many notices, which is uploaded by the GST officer in the GST portal. So using this portal, you can check all the notices in just a single dashboard, and will be explaining the features of the dashboard in upcoming slides. So it is also beneficial to tax practitioners. So usually, tax practitioners will be having a number of GST numbers with them. So it will be regular for them to check to log in and check each and every GST number and so for them it is very beneficial because we have a feature of adding multiple GST numbers. Okay, so basically the objective of framing this Zencash portal is that it is basically user-friendly. So user-friendly in the sense, in a single dashboard, you will be able to check all the GST notices in that. And second one is that checking all the GST notices using one platform. So basically, if you are a company and you want to check all your notices in the sense, you can just register to a Zencash portal and just log into your user ID and password, like register using your email ID and password, and you can just give the user ID and password of the GST number in our portal. And while syncing that, you'll be getting all the GST notices in the dashboard. And it is beneficial for all the tax practitioner. So for all the tax practitioner, like tax practitioner will be having n number of cases with them. So they will be having multiple GST numbers with them. So they can just use this platform so that you can, because our Zencash clinic has a feature that you can add n number of GST numbers at a single time. So using that feature, it is beneficial for the tax practitioners also. So yes, you can just Google solutions.zentachclinic.com to access our website. And in that website, we have the services of giving solutions for GST litigations. And we also have a feature called as GST loan. And we also give latest updates regarding the, like any recent amendments or daily info bites will be posted in this portal also. And yeah, for any queries, you can also mail to us. If you have any doubts regarding this Zencash portal, you can just mail to solutions@zentachclinic.com, or you can use the contact number mentioned in the screen. So this is basically the registration dashboard. So in this dashboard, if you are an existing user, you can just give your mail ID and password and just log in, or give login with OTP, and you will be receiving an OTP. This is like you'll be receiving an OTP, and you can just log in into the portal. And if you are a new user, you can just create new account, and it will be asking you some basic details regarding your company and your name, email IDs, and etc. And you can just use our Zencash portal using this. And this is the Zencash portal's main dashboard. And in this, we have a number of features. Like first, basically, as already discussed, we are having something called as GST number. So you can just add your GST user ID and password using that plus symbol, which is mentioned in the screen in top right corner. And you can also add multiple GST-IN using the same feature, and it will be giving you an Excel template, and you can feed all your user ID and passwords in that, and you can just sync it. Once you sync it, you will be receiving all the notices in the dashboard. And like first option is the latest notices, which is received by you recently, and all notices will give you the updates of all the notices which is replayed by you, and if any pending action is to be taken by you, it will also show in the all notices dashboard. And action taken is something which you have already been responded, or reply has been filed by you. And action to be taken is something which you have to be very careful with it, because it has to be replayed within the due date, else the department will start initiating their proceedings. And overdue is something that the due date has been lapsed, and that count will be mentioned here. And demand outstanding is the total demand outstanding, the total amount of demand outstanding will be mentioned in this dashboard. And okay, so I'll just explain the features, basic features which we have in Zentrax portal, and the detailed version of how to use the Zentrax portal will be uploaded in the YouTube channel, and I have also attached the QR code of our YouTube channel in the upcoming slides. So, okay, first, solutions for GST litigation. So basically, if some action has to be taken by you, and we have to file reply for that, and if you feel that you need any assistance from our side, we Zentrax Clinic will also provide the solutions for you. You can just get solutions from Zentrax Clinic. You can just click on the button, get solutions from Zentrax Clinic, and our experts will be working out the notices for you. And we will also, once you raise the ticket to us, we'll be responding to the client shortly. And GST loan. GST loan is providing some financial assistance to the party. And if you feel that you're not going to file the reply and you are just accepting and paying the demand, we also provide the financial assistance. We also have tie-up with some NBFCs. So we'll be providing the financial assistance, and we'll be processing the loan for you. And update is regarding the regular info bytes. Some recent amendments and the info bytes. Daily we'll be posting some info bytes which is related to GST, or relating it to any amendments, or if any circular has been issued. We also put it in our WhatsApp channel, as well as our Instagram and in our LinkedIn also. And yes, and compliance monitor. We have some feature called as compliance monitor. So compliance monitor is that you can also check whether your GSTR 1 and 3B has been filed in our Zentrax portal itself. So this is basically the features of our Zentrax portal. Yes, so this is our YouTube channel, and we are also working on the user manual guide video, and that video will be posted in our YouTube channel shortly. So kindly scan this QR code. I'll just wait for some seconds. Okay, so subscribe to our YouTube channel so that you'll be getting some you'll be getting the videos relating to the user manual guide to use our Zentrax portal. And the second update is relating to the union budget, which is going to be conducted on the 1st of February 2025. And yes, for the first time, we are planning a session to be conducted immediately after the budget session. So our session commencing timing will be 4 p.m. So we request our audience to kindly join and support us. Yeah, the details of the chief guest, details of our chief guest and the meeting links will be forwarded to you in our WhatsApp channel. Kindly scan this QR code, because this is our registration link, and if you want, you can just scan this QR code and register to our webinar now itself. And this is our WhatsApp channel, so you will be getting the registration link in this WhatsApp channel also. So kindly follow our WhatsApp channel also. And the regular info bytes will also be updated in our WhatsApp channel also. So kindly follow our WhatsApp channel. Thank you. So this is our major update. So now our expert speaker, CA Pavitra, will be addressing your questions. So over to Pavitra.
So the first query is what are all the GL maintained for ISD? Sir, the general ledgers for ISD we need to maintain is that we need to maintain the record of ITCs, sir. So what are all the ITCs we have received for input services? We should maintain those records. Then we need to maintain the record of ISD invoices and if any credit notes issued. Then we need to maintain records for the details of the records of the GSTR 6 return which we file. Then we need to maintain the record for the turnover, that is the with respect to such units. We need to maintain the turnover records also. Who are liable to register ISD? Is it mandatory for whom? Sir, ISD is mandatory if we are having multiple GST registrations and we are transferring common credits. Then in such cases, ISD is required to be compulsorily registered, sir. Is there any timeline for getting registration on or before 1/4/2025? Sir, if ISD provisions are applicable, then we need to mandatorily get registered. So as if we get registered as early as possible, we can inform our suppliers our ISD registration number, so that from 1st of April, they will be issuing invoices to that ISD registration number. To whom we have to intimate our ISD numbers. So, sir, the credits which we are commonly transferring to our branch or any factories, if any, then we need to inform those suppliers from whom we receive those service invoices. If we received a wrong ITC from goods, how to file ISD GSTR 6? Sir, ISD provisions is applicable only for input services. For goods, no such provisions are there, sir. Sir, ISD registration is mandatory or optional? Sir, ISD registration is mandatory if we are having multiple GSTIN and we are transferring common credits. Do we need to keep a separate location for ISD services, that is like Coimbatore, Mumbai, Delhi? Sir, that is the head office only need to get registered for ISD service, sir. Sir, we need to get registered wherever we receive common ITC. It can be in a head office, or if we transfer any common ITC in our branch through our branches also, then we need to get registered there. Is e-invoice applicable for ISD? No, sir, e-invoice is not applicable. My view, no issue any tax invoice, only distributes to ITC only. Sir, we don't need to issue any tax invoice, sir. We need to separately issue an ISD invoice. Sir, what is the consequences for not opting for ISD? Sir, firstly, the ITC will be ineligible for the branches. Secondly, we will be liable to a penalty of 100% of the tax amount if we have incorrectly transferred any credit. We are at the end of the session. Kindly, if you have any more queries, you can mail us to solutions@zentaxclinic.com. Also, I also welcome you all in advance to our next week's budget session. So keep following us. We will update you for the same. So thank you for your time. Thank you all.